Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your StockMiner Brian Johnson. Markets, big move down today, and unfortunately, very hard to trade this one. It was a gap down and then basically a move sideways all day long. We finished, I think, at about 16 points down. We opened it right around 16 points down. So not a whole lot to go off of if you're trying to trade it. It was I'm sure a moment for a lot of people where do I get short? Do I not get short? Do I stay long if you were long? Oh shoot, now I'm down. What do I do? Very, very common emotions to be running through on a big gap down such as we saw today. Still a little bit of work to be done here from the bears. I'm going to show you what I mean by that as we break into the charts and go into them here. Okay, so everything about 1% down, NASDAQ stronger, 1.5% down. All of the foreign markets, which is really kind of odd. A lot of times you'll find at least one that finishes up for the day, but every one of them down on an average of 1 to 2% easy on all of the foreign indices. So definitely some bearish action today in the markets itself. The the internals confirmed it for the most part. Most of the day looked really good for the bears. The caveat: the move down happened. It happened very quickly. It was a gap down to start the day. Most of it happened actually as trading started last night in the overnight futures. And today we just didn't see anything move. The bulls didn't take it back. The bears didn't pull it down. So it stayed very neutral all day. Like I said, internals though, all confirmed, heavy to the downside momentum, but still need some work to do. And it's indicative of what we're seeing here. Huge move, basically a huge move, to the downside, but this huge move is taken all month. Okay, so we've literally moved, 500 points? 500 points in a month. So, looks good on paper. In theory, in practice, it's really not that much. 500 points over an entire month is really nothing. Remember those big bear moves we had when the bears were really moving it and we were going 200-300 points a day easy? This is 500 points in a month. So, still in a very controlled pullback here, which means the bulls have not decided to give up the ghost quite yet. Certainly good potential based on where we're at and what we're looking at, but nothing that you can hang your hat on if you are a bear quite yet. Things to keep in mind: we've had beautiful technical analysis movement to the downside here. Nice push to the downside. Break the 20, test the 50, test the 20 and hold. Now we're back down to at, around, and breaking the 50 on the close. But overall, very controlled pullback. Okay, it's what keeps it so bullish and makes it difficult for the bears to necessarily jump in. Where do you get in? How do you get in? How long do you let it go? All questions that are very hard when the markets pull back in such a nice, easy, sweeping type of emotion. So now we're going to watch tomorrow the 50-day moving averages. We are back below some heavier support, and we did close technically below the 50-day. That will be, I believe, the area that the bulls will try very hard over the next couple days to try to reclaim. If they cannot do it in the next, I would say, day or two, and it might not even take that long, but if they can't do it in the next day or two, I think we see this selling accelerate. We're going to see the bears or the bulls start to pull out. We're going to see the bears start to take over, and that could make for a lot of fun trading if you know how to short. Here was a NASDAQ. Here's a very good indication. Good picture of the gap down this morning. Big gap down below support. Go figure. If you can't beat it, gap it. Beat support. Come back, retest, and held by the end of the day. Still showing us no real bullishness here at all. The bulls didn't try in a quick attempt to pull everything back up again. They just kind of sat on the sidelines, and the bears took over. Here's where we ended, though. This is what I talked about. A little up, a little down, and a break even by the end of the day. No real, if you want to say, no real confirmation after the open. Still a very strong move to the downside. 1.5%, that's good. That's good. NASDAQ has been kind of the weaker, lagging indicator lately, but bigger picture, didn't go anywhere today. Just kind of sat there at a midline. NASDAQ weekly doing the same thing. I drew in this line. It's a little bit more speculative on my side. I'm not sure I'm real happy with it. However, this line, 20-week moving average, will absolutely be something the bulls are going to want to try to claim before this week is over. If they can't find a strength, this is going to be one of those first uh-oh moments for the bears or for the bulls. Okay, so watch this. If the bulls don't try to take this over here in the next couple days, but can wander it sideways, still okay. But if the bears decide to run this thing down and get much below this 2300-ish area and start closing below there on a consistent basis, that could mean very bad things for the bulls. Now maybe we are into a bigger type of correction. Right now, it's still not discernible. Don't listen to the pundits. One down day or a couple down days in a row does not a market make. Follow the charts here. So we are below the 20. That is important to note, but every time we've closed below the 20, we shoot back up above it. Close below, and this one gapped below it to start the week, ran back above it. Here we are back below it again, but the week has not closed. We have a long time before that candle finally closes. Here's the SPX 60-minute. Watch that overhead area, that 1335, 1340 area would be the next place for the bulls to try to creep back into. At that point, we might see a little bit of a fight here between the bulls and the bears. Bulls will definitely try to take that. Bears are going to absolutely try to hold it. But right now, bears still doing a very fine job. We got the gap down, a little bit of run down, a little bit of run up, only to come back. Seeing what? The same thing we saw on the NASDAQ. Gap down below support right here. Come back to retest it and hold. It's doing a very fine job of it right now. SPX daily also in a very defined pullback here. Very clean, very nice, but now closing for the first time in quite a while back to this area here in about a month now, back below the 50-day moving average. Once again, more bearish than bullish, but the pullback is still controlled. It's really keeping the market in a quandary here as to, as a trader, do you jump in long? Do you get in short? How do you handle this? Very difficult. VIX daily, look at this. Big gap up to the 20 mark, which you know I like to follow, guys, and look what happened. Straight down. Did not finish above 19 or in the 20-ish marks at all. That VIX ran straight back down again. We are back to some heavier support here in the markets itself, and the VIX is showing it. It's clearly dictating that, okay, yeah, the bears might have won the day, but we're still not all that concerned about things quite yet. So let's see after a test here of the weekly 50 if it'll actually hold now one way or the other. Between the 50 and the 20 is where it's sitting right now, and more importantly below that 19-ish 20-ish area, which is what I like to watch on a bigger time scale. Apple gapped right down into perfect support, ran itself right back up again, showing quasi-strength. It was down a little bit for the day, but not much. It's basically a break even from where it gapped to. Runs back up, stops, wanders sideways. So, coming into the next few days, areas to watch are this 329-ish area down here, and really back above these moving averages. If you could get it back above 340 or be patient enough to wait till it gets back above 340, you might have something here on Apple again to the long side. But looking at the daily, you can see it's kind of stuck here in the middle of nowhere. It shows much better support if you look at it from a 60-minute than you do a daily. Right now, a gap down and a run back up still shows that there are buyers in the markets. So showing here, as you can see, that there are bulls sitting down here at these lower levels. 330 looks good. Right now there's a lot of buying going on down there. Don't get sucked into, wow, look how far Apple's come down. I can't wait. I'm going to buy. I'm going to buy down here. You need to find the right time to buy, not just any time to buy. I think this is where I see a lot of longer-term investors make mistakes, and that is, well, it looks good down here. I'll just go ahead and buy. But they don't find the right spot to get in. There are better spots than others to enter this, and right now is not the right time to just be jumping into Apple and hoping that it goes back up because it's such a strong company. I agree. It's a strong company. Things are good. But there's a right time, and there's a wrong time to get in and out of stocks. Let me say this. There's a better time and there's a less better time to get in and out of stocks. Right now is a less better time to get in and out of stocks. That's a Johnsonism right there. I don't know if that really is less better. That's kind of funny even thinking about it. But anyway, there's your Johnsonism for the day. There's a better time to get into Apple. Now is not the time. Okay, you want to wait until it breaks some of these overhead levels that we talked about on the last chart before you start dealing with it. Another thing to keep in mind is in the bigger picture, even though we've been slowly pulling ourselves back here, Apple has some work to do. It is now below the 20-week moving average. Okay, and breaks of 320 and such. Boy, be very, very careful on that such a trade. I would expect that they'll find a lot of good support down here if it ever reaches it. But man, got to be very careful about your trades in Apple right now. Let it break these upper levels again before you start coming in. Who cares if you don't catch every last penny of it? Apple's a $350 stock, so if you don't get $7 or $8 or $10 of it, who cares? That's not the point. The point is finding the better times to enter. Right now, it's just not one of them. Wait for it to break some of these other levels. FAS on the 60-minute, you can see coming down, breaking up through the support, retesting resistance with a nice drop to the downside. Where'd it go? Yep, right back into previous support. So, well, I should say what was previous resistance, my bad. Sitting down here on now, what is support? Now, we got some trades. I called out Friday, took some shorts today. You know what? Yeah, it gapped. It gapped below my entries, so very difficult to trade. Probably, nothing I would have ever tried to get in. If you got short, it's fine. Not the best of entries, but quite honestly, with the gaps today, very difficult to play it. Now, look at this chart from a daily perspective. The TA on it is just it's gorgeous. So technical analysis on this is gorgeous. Into a triangle, we break the triangle, we retest, kiss of death, poof to the downside. Where do we end? Right at very logical support, which is the 200 period moving average. 2641 was the 200. 2641 is where we closed. It just doesn't get much prettier than that. The break below 28.50 last week, an excellent entry to the short side. If you are still short on that entry I gave you last week, just move your stops down. Could bounce tomorrow, could fall tomorrow, we do not know. Point is, you're still in a pretty good trade here, but don't lose money on the deal. Okay? Make some money off this thing. FAZ's in a excellent look right here. I love this. If I backed out FAS, obviously I can find the same thing, but I really like this FAZ because at this point it's going up. Sometimes it's just easier to see something when it's moving up in an uptrend type thing, and this is one of them. I think very good solid channel that we're in. You can see we're towards the top of that. I'd be very cautious if you're long FAZ from last week. Got a nice gap this morning. It ran in your direction. Move your stops up. Make sure that it holds up here over the next few days. Here's a beautiful look at it on a daily. 45.75 to 46 is my next overhead area for you guys to be looking at if you are long this FAZ. Okay, so we gapped up, moved into some overhead areas, but we got a little bit of room left to go. We could technically still move up a little bit more before seeing some stronger overhead resistance. Keep it on your charts. Watch it very closely. We get up and over 46, another entry to the long side, and stay with that long, man. Just move your stop up, but stay with the long. All right, that's all of the charts to look at today. Here's what we did last week. CCE, we were in above 29. Took it up into this blue line. That was my target to get out. Some people did, some people didn't. But anyway, we still made money on it by the end of the week. Did very well on over the 29 mark. Made about, 50, 60, 70 cents on that, depending on when you got in. And that blue line worked beautifully. This is why technical analysis is so very important to your trading. Can you see how much easier this would be? You can watch the stock all you want, but if you don't have the right lines in the right place, it makes it difficult to figure out when to get in and when to get out. Getting out is every bit as important as getting in. Matter of fact, it's probably tougher. My students come to me and a lot of times are very strong at when to get in and just don't know when to get out. Well, know where to draw your lines, have the correct education, and you'll not only make yourself a whole lot more money over the career of your trading, but you'll lose a whole lot less money, more importantly, if you just know when and where to get out. In this case, it could have gone higher, but you know what? This was a very logical place to get out. Basically called the top on this one. Beautiful break. We called the top. It was a really good trade for us last week. ERY was one that we held on to for a couple of weeks. This was a trade that I had recommended up and over the $16 area back here. We got the break back here. We ran it up into 17, and then it collapsed on us. Now it's just wandering sideways for the time being. Still might not be a bad trade to the upside, but for us, we took our profits. We made a buck or so off of this particular trade last week. We started it 2 weeks ago and held on to it for 2 weeks. I was kind of hoping we'd get more acceleration last week. We didn't. And when it moved back down, we were out of it. So we made, I don't know, 50, 60, 70 plus cents on it. TZA was another one I watched last week. Really like this one. On the break, up and over 30, I think was where I had that entry for last week. 35.50. It was precisely where I had that break. Took that up and over the 50, put a stop down below the 50, and it worked very nicely for us last week as well. Now it's back up again. Hard trading though. No real entries back here, just gapping to the upside. But good trade for us last week on that one. And VIT was an excellent short. So it was a tough short. It was a difficult short, okay? Because our trade was below $30, $31 here. Then again, below $30. Some people got in, some people didn't, kind of because it gapped. See, it gapped and then it ran up really quick, only to run back down really quick. So some people got in after the gap, depending on how they were playing it. But those that got in after the gap made a ton of money on this one last week. Well, I don't know if they made necessarily a ton of money because they might have been playing one share, and then, of course, they didn't make a whole lot. But percentage-wise, they did extremely well. How about if I just state it that way? They probably made, I think for the week, it was down 17% or something like that. It's just an incredible trade, and a lot of them I just told them to stay with it, and they traded it into today, so they're still making money. This was a great trade, pulled off the subscribers list. This type of stuff, I wish I could say I pull one of these out every week, but I don't. Sometimes you just hit the home run. I think I've had a couple of those over the last few weeks. They've done very, very well for us. There's actually there is a science, there's a method behind the madness to this. It's not just, hey, this looks good. There is more to it than that. So once again, if you don't know how to pick stocks but want to try to find stuff like this, and I'll be up front and say you won't find it every time, but you will obviously always stack the odds in your favor. It's the mentoring course. Take the mentoring course. Pays for itself in things like when to get in, when to get out, where to put your lines, how to make sure the lines are correct, and how to pick your stocks. So important. The basics of trading can be taught. It can be shown to you. Anybody can do it. I teach people that have never traded before to those that have been trading for 20, 30 plus years, and they seem to be doing just fine. So, talk to me about the mentoring course. Let's get started on it before the summer hits. If we continue in this bear market, you guys are going to definitely want to know a little bit more about how to play that. And wow, because there's good profits when the markets really dive as hard as they do. Okay, so that was what we played last week. Got some really good ones started early on this week that have done well for us so far, but we're one day into it. We'll see how that finishes out. Have any questions for me, write me, call me, and we shall talk to you again, probably again on Wednesday. See you then. Bye. Oh, one more thing, not bye. I'm looking at opening a trading room. For those of you that may be interested in sitting in on a trading room with me, let me know. Send me an email, and I'll put you on a list. And when I put all the specifics together, we'll find out if where the rubber really meets the road when it comes down to price and whatnot. I'll let you all know. You guys can see if it's something that's for you or not. But I'm looking at opening up a trading room where we can I'll call out trades and track stuff all day long for you guys. And if that would be something of interest to you, let me know. And I'll put you on my list, my mailing list. Talk to you later. Bye.